Ever wondered what truly drives stock prices up or down? Join me as I dive deep into the world of stock trends and uncover what market capitalization really reveals about a company, this position in the market and how it can guide smarter investing decisions. Market capitalization, or market cap, is one of the most talked about terms in the stock market. It represents the total market value of a company's outstanding shares. But beyond the math, what does it actually tell us about stock trends? Understanding market cap is key because it offers insight into a company's size, stability, and influence in its industry. It's calculated by multiplying the current stock price by the number of shares outstanding. For instance, if a company has 10 million shares in circulation and its stock price is $50, the market cap would be $500 million. Straightforward, right? But here's where it gets interesting. Market cap also reflects a company's growth potential and risk profile. Generally, companies with higher market caps are more established and stable, but might not have the same explosive growth potential as smaller emerging firms. This brings us to one of the biggest misconceptions about market cap. Many investors assume a large market cap means a company is automatically a safe bet, but that's not always true. Market cap only tells you how big a company is, not how healthy or profitable it might be. A company can have a huge market cap but still struggle with declining sales or shrinking market share, which can make it a risky investment. Some investors also think small-cap stocks are always riskier than large-cap ones. While small-cap stocks do tend to be more volatile, they often offer greater growth opportunities. The real secret is understanding what market cap actually measures and what it doesn't. It's not a report card on performance. It's a classification tool that helps investors group companies by size, growth stage, and potential. Now let's break down the three main categories of market cap: large cap, mid cap, and small cap. Large cap companies, usually valued above $10 billion, are established leaders with consistent performance. Mid cap companies, typically between $2 billion and $10 billion, provide a balanced mix of growth and reliability. Small cap companies, with market caps below $2 billion, are younger, more agile, and often have higher upside potential, but they come with added risk. Each category attracts different types of investors. Large-cap stocks are often favored for stability and lower volatility. Mid-caps strike a good balance between safety and growth. Small caps, though unpredictable, can deliver substantial returns when chosen wisely. Understanding these distinctions helps investors diversify portfolios and align their strategies with risk tolerance. When analyzing market trends, market cap can reveal how investors are feeling in times of uncertainty or recession. Large-cap stocks tend to shine because they're viewed as safer havens during economic recoveries or bull markets. However, small-cap and mid-cap stocks often outperform as investors chase higher growth opportunities. A look at history proves this point. In the late 1990s, small-cap tech companies surged during the internet boom, while in recent years, large-cap tech giants like Apple and Microsoft have provided steady returns and resilience. These shifts show how market cap trends evolve with economic cycles and investor confidence. Another layer to consider is how market cap impacts institutional investment. Large-cap companies often attract mutual funds and pension plans due to their liquidity and stability. Meanwhile, small caps attract retail investors who seek higher returns with calculated risks. This balance between institutional and individual interest keeps market dynamics constantly shifting. Market cap also influences how companies are perceived by the media and analysts. Large companies with high market caps often receive more coverage and analyst reports, while small-cap firms may remain under the radar. This lack of attention can create opportunities for investors who spot undervalued small-cap stocks before the broader market catches on. Additionally, market cap can change rapidly based on news, earnings reports, or economic events. A strong quarterly performance can boost a company's share price and push it into a higher market cap category. Conversely, negative news or poor results can drag it down. This constant movement makes market cap an important indicator of investor sentiment in real time. Another interesting aspect is how market cap affects mergers and acquisitions. Larger companies often acquire smaller ones to expand their reach, innovate, or eliminate competition. Investors can analyze these trends to predict potential buyouts and profit from market reactions. Market cap, therefore, can play a key role in identifying such opportunities early. For long-term investors, tracking how a company's market cap changes over time can provide valuable insights. A steady increase might signal sustainable growth, while sudden spikes or drops can indicate volatility or speculation. This makes market cap a helpful metric for both short-term traders and long-term investors alike. In conclusion, market cap remains one of the most important tools for understanding how companies fit into the broader market. It helps categorize them by size and risk, offering valuable insight into their potential for growth and stability. By analyzing market cap, investors can make better, more strategic decisions. To summarize, market cap reveals a company's size and stability, but doesn't guarantee performance. Each category, large, mid, or small, carries its own risk and reward balance. Using market cap as a guide helps investors diversify and fine-tune their investment approach. As we wrap up, remember that market cap is just one piece of the puzzle. Combine it with other factors like financial health, industry trends, and overall economic conditions for a complete investment picture. With that balanced perspective, you'll be able to make smarter and more confident investing choices. Thanks for watching. Share your thoughts about market cap in the comments below, and don't forget to check out my other videos for more stock market insights and investing tips.